Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, September 19th, 2025. S&P 500 currently sitting at 6634. I'm David Zarling. I'm here with Ian McMillan. Took a week off for a moment of silence last week. Good to be back on here with you this week. So plenty to cover. Where would you want to start?
Stocks up a little bit. You said 6634.
Yes.
That's got to be the highest number we've ever started off with.
Yeah, it is. Another all-time high.
All-time highs for Dow, NASDAQ, S&P, and
oh man,
last. So, and sometimes least. I mean, Russell still has some work to do, but our friend Russell made it back. 3.5-year highs, something around there, maybe just 3. 2021. No. So 4-year highs.
It's pretty amazing. For some kids out there, this is their first small cap all-time high.
Yeah. It is certainly a sign of participation. Now, where do we go from here? We will see. I think your average human can pull up a chart of the Russell. I mean, a lot of energy has been spent to get here, just like the last 2 times we were up here. Maybe not so much back in 2021. That was November 2021. So we're coming up on 4 years. We'll see. We'll see if we slice on through or if we consolidate up here, right? I mean, I think if I'm looking at IWM, I think 245 to 230 could be a pretty practical area to set your expectations for. If we got below 230, and then you're kind of back into failed breakout territory, right? Like we had, because that was the end of last year.
Yep. I mean, really, 0% return for small caps since November of 2021.
Crazy.
So I don't think we get to sit here and say too far, too fast for many stocks.
Yeah. I mean, there's 2,000. Now, obviously, there's some of those 2,000 that have done fine, but not a lot of them. And I don't know. I mean, right, in the long term, right, is this a long-term wind change for the sales, like on a relative basis? I don't know. It's a decent start.
Yeah,
I'd say the last month or so.
Yeah, if you were going to see it turn the corner, this is what it could look like.
And if it doesn't, then we'll know.
Yeah, it's almost like there's a benefit to studying price charts. It's almost as if all the opinions, rational and irrational, are represented by price, a future discounting mechanism. It's almost as if you could ignore fundamental data because the fundamental data is in price, right? Because I think the big topic this week was a rate cut, right?
Oh, I thought you were going to go somewhere else with that.
Oh, no, we can go there eventually. You go where you were thinking.
So I thought you were going to talk about, so you are lamenting on your fundamental data, and you see what Trump proposed?
No.
So just having like biannual or
biannual.
semi-annual earnings reports.
Yeah, semi-annual earnings reports. Interesting.
Boy, wouldn't that throw the fundamental boys and girls for a loop?
Yeah, what are we going to talk about then?
I bet that would make earnings reports even more volatile.
Well, could. Yeah, I don't even know.
I don't know. Or maybe there's some weird thing where it makes them less. So no one cares. I don't know. I have no idea. We'll see if it happens. I think it would be funny. I mean, it doesn't affect my day job. So I don't really care. I mean, we could be doing earnings 8 times a year.
Weekly
Weekly
earnings. Why listen to the Weekly Trend when you could have weekly earnings, Ian? when you could pour over weekly balance sheets, cash flow statement,
All the updates, the new projections.
all the estimates, missed, hit, exceeded.
Honestly, probably better for investors, traders, to only have it twice a year.
I mean, it would be less. I don't know. Would it be less or more accounting work? I don't know.
That's a really good question.
But it's an interesting concept. I mean, I don't really have a strong opinion on it, but I think it's fascinating.
I'm going to need you to have a strong opinion.
Okay, let me have one here. We should not do that because that's not what we've always done.
Yeah. Change sucks.
Yeah, that's my favorite. That's my favorite argument. But we've always done it this way.
Russell, all-time highs.
Are you trying to get us?
I am. I'm the traction captain.
Okay.
Gold.
Yeah.
Did we get gold all-time? Yeah, on like Tuesday we did. It's held up pretty well. Sold off a
Yeah,
little
gold
bit
and gold miners, man. I mean,
gold miners, yeah. Gold. I saw GDX was back to all-time, or yeah.
and really, I mean, you look at the last 2 weeks recording back-to-back new all-time highs above, and using GDX above $66. I mean, this is the highest GDX has been in all of our lifetimes.
Never.
It's amazing.
There's a lot of kids born that have just seeing their first high in GDX.
Yeah. And I mean, now the way it looks on a relative basis too is pretty solid when you compare it
to. Hey, you don't have to sell me.
Oh, I know I don't.
You don't have to sell me on the miners of the gold.
You finally caught your bucking bronco, and I'm proud of you. And you could, I mean, legitimately on a relative basis, there could be 27% more alpha in this thing.
Well, then here's the thing: is I'm talking like physical here, but like silver versus gold, SLV versus GLD. And so that's about to break out it's a really nice consolidation the last 2 months.
Yeah. You're just saying that'd be just further confirmation of precious metals doing well when silver does better than gold. And I would even I'm not making that argument. When we see gold miners do what they're doing versus gold itself, when the miners are doing better than the metal, that's indicative of a precious metal environment.
Dollar's still pretty weak, so I guess that's a good tailwind to have.
Yeah.
Bounced a little bit this last couple of days, but I mean, overall, downward sloping a 200-day.
I mean, even uranium miners doing well.
Uranium, very hot. Still not on any.
But pretty fresh,
laying
relative
bed at night,
breakout.
stare at the ceiling.
Yeah,
my wife keeps telling me about it. My kids ask me about it. We go to Target and buy me some uranium miners.
Yep. Like, how are we going to have Christmas without this?
Got to find something else.
But yeah, I mean, it's a fresh breakout this week. If you use something
look good. The individual stocks look really good.
Mm-hmm. And internationally, we continue to see China perk up well. I mean, you look at Baba.
Yeah.
Alibaba continues to move higher. China continues to move higher.
It's China, so you got to be a little. It's really amazing how bad Chinese stocks have been versus U.S. stocks.
For a long time.
For a very long time. They're kind of a pain in the butt. They do go on these nice runs, but.
I mean, just using FXI versus S&P, we're still at minus 85% alpha since 2009.
Yeah. FXI is flat since May 2007. That is 18 years. Going a lot of places and going nowhere.
Mm-hmm. A lot of heartburn in there. A lot of Pepto-Bismol. And emerging markets overall, how are those looking? Like, I know we talked China. And China emerging market.
I mean, technically, yeah.
Technically, but I think
every year I go and look and see if it's still. Though, the way MSCI does their rankings, you have to have X percent of middle class. X percent of your population has to be considered middle class. That's one of their things.
Oh, okay.
And so I think that China's still. I don't know I don't know the deep that was 4 or 5 years ago, I looked into, maybe even longer than that, how they actually do. Great, because then there's frontier markets. Got rid of that ETF. It's probably killing it right now. Would have been. But yeah, emerging markets. I mean, pretty good. South Korea. I think South Korea is like an emerging market. A lot of that Asian stuff is good.
See, I would have put South Korea in a developed, but what do I know?
Is it? Could be.
And, I mean, Africa looks good. It's broken a downward rate of trend that goes back to 2008. So not too shabby out of emerging markets. I mean, even ILF is breaking a rate of trend that goes back to 2008. So I think we got some clues here out of emerging markets that might be turning the corner for a good bit here. We'll see. Like you said, a little more higher beta when you look at that segment. And then when you look further international, I mean, Japan continues to follow through on its 30-year breakout on an absolute basis. Not too shabby. And speaking of high beta, one of your favorite relationships, high beta versus low vol.
Yeah. Continues to confirm.
Looks good.
Here we go. South Korea is classified as an emerging market. So it kind of goes, I mean, you're kind of right. So it basically checks all, MSCI say it basically checks all the boxes for a developed market except for market accessibility for foreign investors.
Interesting.
It's known as the Korea discount. The gap between South Korea's economic development and its emerging market classification leads to a phenomenon known as the Korean discount.
Learned something new.
And that's why people listen to the weekly trend.
Yeah, I almost fell asleep. I wasn't saying that to be mean. I was just saying it's a good fundamental. Yeah. Good fundamental.
Sometimes you got to go down the rabbit hole real quick.
That's right. So that's interesting. So does that mean China would have checked the access part, but not the middle class part?
Yeah, I guess so.
Right?
Yeah, China, I mean, clearly very accessible.
Interesting.
India, very accessible. So accessible, they reach out to you via text and email. That's how accessible it is to spend money in India.
It's amazing. Now I'm awake. It's great. So
you said earlier that we cut rates this week.
Yeah, I find it fascinating. I had someone approach me talking about it.
Oh.
Told them I didn't want to be rude, but didn't care. I understand why people care. But since rates have been cut, rates in the credit market have risen. Is that how this works? The Fed cuts rates.
Yeah.
And we see treasuries fall and rates go up. So it's interesting. I mean, it is what it is.
Yeah, we'll see how it plays out. I think it's definitely one of those things you got to give it a few weeks, and then they're already pricing in another rate cut. Is it just it's monthly they make those decisions?
Well, they've got emergency ones. They've got your standard scheduled one. You know, like when they have their standard meetings.
A little meeting every month.
Mm-hmm. I do find it interesting looking at the U.S. 2-year yield, right?
Yes.
You look at 2s versus 10s, but when you just look at the 2-year yield, it's at an interesting spot, that 3.55, 3.57%.
I've been down here a few times.
Been down here a few times, and if that were to roll over, if we see any type of significance from that, I mean, the past times that it has rolled over has been a little. Now, when I say the past times, I'm talking about like 2007, 2019, that when you see the 2-year yield roll over. So I think this is a pretty important spot here. 3.55.
Spooky. That's some spooky talk, Dave.
It is. Well,
Halloween season is upon us.
It is. I'm sure the spirit.
Yeah, that wouldn't be fun.
Spirit Halloween stores are popping up everywhere.
Visited one on Saturday. Probably going back tomorrow.
Oh, did you get that Philly's Karen costume, or what did you?
No, we had to pick them out for the kiddos.
Wow, you're on it. I mean,
we are on it. We are very on it this year. Getting in early.
You got to get first pick.
Yeah.
You don't want any picked over. So what are the kids going to be? Or should we cover that more when closer to Halloween?
Yeah, maybe we'll cover it on our Halloween special.
Halloween special. But yeah, I think, I think it's always important to look at things that challenge your thesis, right? Because I think our listeners know that since the breath thrusts we saw back in April, we've been pretty bullish, and because price has confirmed it, not because we know anything special, it's just following price. And so you always want to look at things that challenge that thesis. And I think the 2-year yield could be one of those things. Like if I were to say, that's a little bit of something worth paying attention to, it would be those 2-year yields, that if we're going to roll over and see high demand for short-term cash, maybe that's indicative of a little bit of concern in the market. We'll see. Yeah, we've got to see this 3.55 level hold. We still see triple C credit spreads trending down.
Yeah.
Maybe a minor divergence here versus equities as a whole. So you always want to look at things that are going to challenge your thesis. I mean, you got things that are confirming your thesis. When your top sectors year to date are communication services, technology, industrials, when you're seeing small caps go out to new all-time highs, when you're seeing financials participate or staples participate, but not necessarily lead on a relative basis, when you're seeing emerging market strength, those are hallmarks of a bull market. And so you just want to look at what are things that are potentially not. And maybe this 2-year yield thing is something. I don't know. And we won't know for a while. What else are we seeing out there? What else is worth highlighting for our listeners?
You just mentioned communication services and tech. I would say those are still two areas to hang out. We've kind of lost industrials.
Yeah, what do you think about industrials?
Lost financials. I mean, they look fine on an absolute base. I actually really like the industrial XLI. I think that has a lot of potential for Q4. Yeah, and we haven't gotten, it's not like, healthcare hasn't done much, right? We had the big healthcare pop, relative pop. It was like a month ago, like mid or late August. Now discretionary has gotten better.
Well, and that's another one, right? If you look at
and retail looks good. A lot of the retail stuff is not too bad.
Well, discretionary versus staples on an equal weighted basis continues to confirm risk on. So you look at something like RSPD versus RSPS, new all-time highs.
Yeah.
You mentioned healthcare. What I find fascinating is if you look at IBB biotech, which is in healthcare, versus XLV, we have a base breakout on our hands. So we're talking about risk taking within the healthcare sector, even though healthcare, broadly speaking, like your large cap healthcare, not looking so great. But we're going to go ahead and be allocated towards biotech stocks. It's interesting.
Yeah. Energy pretty rough. Materials, you have gold miners, but materials as a whole pretty rough. Obviously, staples continue to severely underperform. We want to see that. Same with real estate. And then, you take today's action and XLK technology. Looks like we might get some continued strength here. We'll see.
Yeah, the MAGs go out to new all-time highs on a relative basis.
MAGs is going out to,
FANG's going out to new all-time highs. Large cap or mega cap, MGK versus S&P trying to go out to new all-time highs.
Semiconductors had a big day yesterday.
Yeah, a little cooling today, but that's okay. They were pretty on fire yesterday.
All-time highs, not new relative all-time highs, but they continue to.
I thought you brought up a pretty good point in one of our market calls this week that I kind of wanted to get you to elaborate on, and that's, we talked about some of the sectors underperforming, like healthcare, like real estate, like materials, industrials, but they're not, when you look at them underneath the surface, they're not all the same. And what I mean by that is, like, for example, real estate. Like, let's say your mandate was to be a real estate equity manager. The picking is pretty slim.
Yeah, it sucks. Like, broad real estate is terrible.
Right. Like, you look across the spectrum, large, small, medium. You look through all the the charts in real estate, and there's just not a lot. Maybe CBRE, maybe but that's about it. But then you look at industrials and you notice this. There's some things there, right?
Yeah, I think there are. I think you could. I mean, there's a lot of things working. Obviously, the big one is aerospace. We know that. But even outside that, a lot of good stuff there. It's just those big ones that come to Honeywell, UNP, Cummins and Caterpillar don't look bad, but they're not, they are big weights and they're not, they're just going sideways against the index. So really no boost from either of those. ADP, I think an ADP is also in industrials technically, and it's fine. But yeah, on a relative basis, those top 10, like any ETF or portfolio, your highest weighted stocks are going to have the biggest impact. But yeah, if you look at, broad industrials, small caps, mid caps, all the other stuff, pretty solid stuff going on out there.
Yeah. Just, it's just that you got to pay attention to all the pieces underneath the surface. You can't just look at XLI. You got to look at what makes up that sector and what's going on there. And there's some opportunities within the sector. And then you look at something like real estate and there isn't. Just is what it is. What do you think about, you mentioned tech, broadly speaking, but isn't it fascinating to see some old tech names really perking up?
And I think also PSCT, small cap tech, made its all-time highs.
Yeah, how bearish is that if that's happening?
So you're definitely into participation there. I'm sorry I interrupted you. What was your question?
Well, it was just some of the old names like Oracle and Western Digital. Yeah. Oracle and Western Digital. I mean, Western Digital goes back to the 70s. Oracle. I mean,
yeah, I think Larry Ellison's richest man in the world.
Crazy.
Regain the top spot. We'll see. Tesla's had a pretty big move. Tesla's up. I think I saw 72% since Tim Walz was dogging on it.
Well,
big fade on that guy.
Yeah, no comment. But then there's also new tech. Remember when they used to hate on Cathie Wood? And look what ARK funds are doing.
ARK, yeah, Cathie's definitely having a great year across the board. ARK K, ARK Q, ARK F, ARK W. I know I'm forgetting one in there. She's even come out with the ARK G, their biotech one. I think ARK G got to year-to-date highs earlier. Okay, not year-to-date, but back to where it was in February. Yeah.
ARK X,
that was it. Very strong. I mean, people haven't talked about her in a few years, so.
Oh, they'll wait. They'll wait and think she's the next greatest thing once we're at all-time highs, and that's too late. That's how this works.
Boy,
price moves first.
If ARK gets back to all-time highs, I mean, no, we got a lot of bull market ahead of us.
Mm-hmm.
That would be something. Hey, I mean, that's it's a really nice looking chart. I mean, that would be over, and it's like another 90% just in ARK. Obviously, it doesn't mean the S&P is going to go up 90%.
Right.
Okay, this says 87%. We'll see.
We will.
I will tell you what, if it keeps going, we'll be participating.
That's right. Participate in uptrends. I believe you had a quote from Ed Sequoia on that.
Yeah. The quote was, let me go back here and find it. I don't predict markets, I just ride them.
Makes sense.
Sequoia, very famous trend follower.
Why get caught up in predictions?
Couldn't predicted anything. Couldn't predicted that Intel was going to get, what was it? NVIDIA took a stake in them?
That could be. I thought the U.S. government was talking about taking a stake in them.
Yeah, I think they convinced NVIDIA to do it.
Oh, okay.
Probably better. It's better. We need private partnerships, not with the government.
Agreed. So I think it's appropriate to make sure we highlight the sponsor of this podcast, the Adaptive Select ETF, listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting apvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. We really appreciate their support. Helps us deliver this message to our listeners. Anything else you want to highlight, Ian, before I ask those listening to give us a high ranking and share us with others?
No, just remaining an uptrend. I love when we get to be on here and talk about stocks at all-time highs. So
for sure,
got to stick it. Got to keep it going.
Got to confirm. So we can continue to see uptrend and bullish behavior. There's a couple red flags that we've highlighted, but we really appreciate everybody listening, all the great listenership that we have. We ask you to share it with your friends, give us a high ranking on your platform of choice. We appreciate it.
Weekend, everyone.